Welcome back, folks. In today's video, let's talk about two of my favorite index funds, and that's Charles Schwab, ticker SWPPX, versus Fidelity's FXAIXX. I use both brokerage accounts and own both of these index funds. Now, before doing this video, I kind of made some assumptions on which ones I thought was going to be better than the other. And I was actually surprised at the end of this video when I looked at the numbers, and we'll talk about my overall thoughts overall. But before we get started, this video is for entertainment purposes only. I'm not a financial advisor, and any investment may involve risks. So let's jump into today's video. But before we get started, make sure to subscribe and smash the like button. All right, folks, let's talk about SWPPX first. Now, if you don't know, this is a Charles Schwab index fund. Now, this particular index fund, it focuses on the S&P 500. So you're basically getting the top US companies in this particular index fund. So let's look at a couple of little details here. This index fund been around since about 1997. The life of the fund has a return of about 9%. And has an expense ratio of 0.02%. It has about 506 holdings altogether, a little more than 500, but overall pretty close to the S&P 500. In addition to that, let's look at its top 10 holdings. Its top 10 holdings account for about 25% of all their total assets. The top holdings are Apple, Microsoft, Amazon, both Google Class A and C, Tesla, Berkshire Hathaway, Johnson & Johnson, United Health, and NVIDIA. So if you don't want to buy any one of these particular companies, you can go with an index fund like this or ETF that actually covers those particular companies, right? So with this, you're getting all those companies and more. In addition, let's look at the performance here, right? So if we had $10,000 10 years ago, that $10,000 will be worth about $36,000 today. 3 years ago, about $14,000. And 1 year ago, it'll be in the red. You would have lost about $500. But keep in mind, the market, especially this year, has been going down. So yes, it's down, but it's not as down as, say, a Voyager, a Netflix, and so forth. A lot of these individual companies are down a lot. Unless you got lucky and you pick one that went up. But hey, if you're new to the market, you just never know, right? So that's when it comes to SWPPX. Now let's compare that to my other favorite index fund, which is FXAIXX. This is Fidelity's 500 index fund. And essentially it's the same thing as SWPPX with some minor tweaks, right? They're all trying to mimic the S&P 500, but they tweak it in their own individual way. So this index fund you can only get at Fidelity. The other one with Charles Schwab. This one's been around since about 1988, but that inception date, depending on where you look, is different. I've noticed. I've seen two different dates, but I decided to go with this one because this is the one they had on their site. The life of the fund, you're looking at about 10.33%. So the life of the fund, this one has performed a little bit better, and the expense ratio is lower at 0.01%. So you're definitely getting a little bit of a better deal, especially when it comes to the expense ratio. Now, when we look at this particular index fund, it has about 508 companies in this particular index. Keep in mind, they do fluctuate depending on the quarter or whatnot. So it has about 508 companies, slightly more than SWPPX. Also, when we look at the top 10 companies, we're essentially looking at basically all the same companies from Apple, Microsoft, Amazon, Tesla, Google again, NVIDIA, Berkshire Hathaway, United Health, and Meta. So there is a slight change with one of the companies, but sometimes they mirror each other pretty closely, so they do fluctuate as well. These top 10 holdings account for about 30% of the overall portfolio. So it's a little bit more heavily weighted in the top 10 holdings, slightly more than SWPPX. Now, this is something I was actually surprised of when I look at um, the performance, right? When you look at the 10-year performance, if you invested $10,000, it'll be worth about $33,000, which is really good. Both you're basically earning more in your money. 3 years, about 13,000. In 1 year, just like the other index, you would have been down. But if you look at this index, you would have been down a little bit more, unfortunately. So that's one thing I've noticed. And like I said, I do own both, but here are a couple of the key highlights that I've noticed, right? SWPPX has a higher expense ratio at 0.02%. But when you look at the performance, it looks like SWPPX edges out FXAIX when you look at the performance based on a hypothetical 10, 5, and 1 year performance, right? Now, this could kind of fluctuate depending on when you buy each individual one, but based off the numbers I plugged in today, it looks like if you look at the 10-year difference, you're looking at a difference of 5 to 6% in return. Also, when you look at the 1 year performance, you're looking at about a 5% difference. And that's something I wasn't expecting before doing this video. I thought the performance would be closer in line to like 1 to 2%. I wasn't expecting a difference of about 5% when you look at the hypothetical um, earnings based off their individual charts and stuff like that. So overall, I do own both of these index funds. I like both of them. They're a great way for me to invest, especially for retirement. I will continue to invest in both, but after doing this video, I'll probably start investing a little heavier into SWPPX because I was doing more so in Fidelity. But after doing this video, even though it has a little bit of a higher expense ratio, the returns seem to be a little bit better overall with this particular index fund. All right, folks, so you watched this much of the video. Make sure to like, comment, and subscribe. Let me know, do you own SWPPX or FXAIX? What are some of your S&P 500 favorite index funds or ETFs? Let me know your thoughts below. Until next time, peace.